Welcome to Markets Now. I'm Michelle Rook along with John Heinberg with Total Farm Marketing. And we're seeing mixed trade in the livestock as well as in the grains after the WASDE report numbers released. Corn and wheat lower, soybeans to the plus side. And let's start off with the corn market. We did get a few bearish numbers in there in terms of both an increase in ending stocks from a domestic basis and a little bit of a bump up in that Brazil crop, right, John?
Yes, we did. And, actually, analyst expectations in terms of the U.S. side were pretty much right on expectations there with what the USDA put out. They did bump the exports down 50 million bushels. That brought carryout up. Obviously, they did also lower the imports to kind of balance it out. So we're plus 35 million bushels more in terms of old crop carryout, 1.452, up from the 1.417 last month. That spills over into the new crop side, adding 35 million bushels there. No changes on yield or acreage, which was kind of expected given the time window that we're in here. So again, kind of in line. Market focuses back to weather. I would say maybe one of the more disappointing things, as you mentioned too, is just the fact that they raised that Brazilian corn crop up another 2 million metric tons, a million over what the market was expecting, just reflecting how good of a crop is coming in that we're competing against on the export market.
Yeah. So do you think as we go forward, exports are going to continue to be a problem? And is USDA going to have to make further adjustments downward in subsequent reports?
I think the trend is definitely established on that side of it right now. You go look at the export sales numbers, especially, here on old crop corn. We sold more beans than corn over the last 2 months. And in terms of the old crop supplies, we haven't done that since 2012. We've had those couple of weeks of cancellations in there. And even on top of that, this last week of export sales numbers, we had net cancellations for new crop sales. We just got to realize that this Brazil crop is huge. It's going to be undercutting the market prices at this time frame. And we're just going to have a hard time moving things. And that's probably the biggest bearish factor that's out there, despite the weather that's going on. People talk about weather and why haven't we rallied? It's the pure fact that we just can't move this product, and that demand's going to trump anything that we see on the weather front, barring it really getting severe.
Yeah. And as you say, today we are trading weather with some rain in the extended forecast. But, if we don't turn much wetter, John, do you think that we're going to see some revisions going forward in terms of yield? Because are we producing a 181.5 bushel per acre yield right now here with 45% of the corn acres in drought?
I would agree with that. That's my assumption too. I think going forward, I think it's going to be hard to hold that trend line yield. We'll see some adjustments probably in the July report. But the problem is there's still a lot of room on the balance sheet on the demand side that the USDA could make some adjustments. We could easily shave 5, 6, 7, 8 million bushels per acre off this and take some of that demand that's on that new crop balance sheet and this old crop balance sheet if the demand doesn't pick up, and still keep corn carryover the 2 billion bushel mark for next fall. So it's one of those things that's really just going to be a wet blanket on any rally here, is the fact that we can't get this product to move unless, like I said, the weather turns severe, and then we're looking at a really drop in yield. And we all kind of agree, at least from the weather services and things that we're all looking at, the pattern is changing. It just comes down to when the moisture comes and then how much, and if it's timely enough to keep this crop going. But again, corn is made in July, and that's, I think, going to really be the focus of the market. It'll be that early July weather.
Not a lot of changes on the soybean balance sheet either. Ending stocks up just 15 million bushels. And obviously the market is digesting that quite well.
Yeah, it was. Again, that was kind of what was anticipated, was to see a little bit of drop in the demand side. I was kind of hoping maybe they even go status quo there, especially given the fact that we sold a little bit of old crop beans here the last couple of weeks. Had that announced sale to unknown destinations this morning. So there's a little bit of demand out there. And we still got time to continue to ship beans and maybe meet some of those targets. But again, showing that pattern that we're just maybe a little heavy on the demand side, adding a little more to carry out, and then that just trickles through without any changes in terms of yield acres or production for the fall.
But this market is up sharply today, and we're seeing soybean oil driving the boat. And so what's going on there? What's the story right now?
That biodiesel component is going to continue to be a supportive factor in the soybean market. Again, there's chatter out there that U.S. beans are heading to Europe to get crushed, to have those beans get brought back as oil to meet that growing oil market here for biodiesel in the United States. again, some of the logistics that we have in our country, just that it's cheaper and easier to do that and then keep it right here in house. But that's, with a supply at 230 million bushels, still relatively tight, obviously, at a historical level. We're seeing a little buy into this market. Now we're looking at bean oil pushing $4 to $5 a pound higher this week. Big move off the lows in the last couple of weeks, and that's what's given us this bounce in the bean market. I really think today's closes might be really key. Can we kind of hold on to these gains with the potential moving higher next week, or not if we kind of topped out here, especially if the weather does turn a little bit wetter with the forecast?
Yeah, what do you think? Can we clear the $12 mark or not on Novi beans?
The charts are pointing to a possible inverted head and shoulders. Maybe we move it up to the 50-day moving average around 1250. But I think we need that confirmation to get over that psychological 12 value and a little follow next week. So again, like I just said, I think the close today is going to be really key. If we just can't get through that barrier, that could be a bit disappointing. And maybe we've topped this rally out until we see what next week gives us. If that bean oil market continues to be strong, that'll continue to support this price higher. But the problem is there, again, the export demand is still going to be a key. If we get too elevated in price, again, those U.S. purchases from outside sources there are just not going to be here, especially with that Brazil pile down south, which the USDA upped a little bit again today.
Absolutely. We didn't see many adjustments in the report today.
Yeah, pretty quiet report on the wheat front. They did bump up production slightly, and that's where we get the little bump in new crop carryover. The new marketing year just started here on June 1st, so it's real early to start making adjustments on the demand side, and that was pretty much what the market was anticipating. So at least at this stage, the wheat was pretty neutral in terms of its numbers. Our biggest problem with wheat is still where's global demand and global prices at, and where's U.S. wheat on the competitive side. We're still struggling there, and that's what just kind of limits any rallies like we tried to see a little bit this week.
Yeah, because Russia just keeps undercutting us big time in the market, don't they?
Very much so, and until we have maybe a better picture in terms of where we are with our supply and things of that nature, just the logistics of putting it on a boat, hauling it overseas versus wheat that's centrally located, right there in either Russia or Europe in that regard, just makes it very difficult for us to compete with current price levels that we're at.
So, John, considering what we know about weather at this point, and of course, we're in that volatile weather time period, and what we got out of the WASDE report here today, is this just kind of a reminder that we do have the potential for a much bigger crop, that we are seeing supplies growing overall?
That is the trend, and it's been that trend for a handful of months now, that we continue to see just little upticks in terms of the overall supply. That keeps us in a downtrending market, at least in terms of price overall. So we still just have to be careful of that, be conscious of that. It's not just about supplies here. Again, that global supply, that supply that's coming in South America, obviously in the Brazil crop, that's still just going to be a wet blanket on rallies here in the short term. And then if our weather does straighten out, I mean, it's still early. I know there's still, a lot of drought on the map, a lot of concern for producers, but I still have a handful telling me that things are holding in there pretty well. And if the weather does start turning wetter, that potential for our crop to come through still is very, very high. Those are things that are still at least bearish tones in this marketplace at this time frame.
Great. So, quick question on the cattle market. Of course, we had the all-time highs in futures and cash trade earlier this week, followed by what looked to be key reversals. But do they hold here, especially when you're in this tight of a supply situation?
We'll have to see. I mean, right now the technical side is winning out. We saw cash trade higher this week. We continue to see retail values firmer again at midday. We got 330 choice carcasses out there. That leaves some meat on the bone for the packers. Packers are looking for cattle. They're looking for high grade and high choice, quality cattle, and it's just not there. The supply is not there. The only concern is where's the sticker shock start coming into play in terms of these retail values, and maybe we're getting close to a peak there. The charts I've turned over hard this week on Wednesday. Tried to hold it yesterday, it fell apart. Same thing today. We were positive most of the session. Now we're turning a little bit negative. I think we dropped back to some support levels, and this market needed it given the speed of the rally here the last couple of weeks. But then we'll continue to watch those fundamentals. I mean, you look at August compared to 5-state average cash at 190, looks pretty undervalued to me at 171. So maybe we get some correction here. It might just be an opportunity to have a little ownership over top of any sales you got out, in case that August contract wants to close that gap.
Yeah, that futures discount should be supportive going forward. All right, thanks so much for joining us, John Heinberg with Total Farm Marketing. That's Markets Now.